If I had a gun to my head, I would tell you that gold is being reintegrated into the financial system, into the monetary system. Let's go back several years to 2017 and move forward. In 2017, we see out of nowhere the German Bundesbank, who evidently for 4 years prior had been asking the Federal Reserve to send them back their gold. And it had taken so long, they finally got aggravated, put an article in the Wall Street Journal, made a big deal about it, and said, more or less, send us back our damn gold. And we did, eventually, some of it. They're asking for the rest of it now, majority of it now, and I don't blame them. Evidently, some of the bars we sent them had different serial numbers than the bars that were sent to them, or that they sent to us originally. But what got interesting to me was that if you go back to 2011, from 2011 to 2017, the central banks and everyone was selling gold. It had gone from a high of 1,900 and had fallen several hundreds of dollars down to I don't know, maybe $1,000 an ounce or whatnot. And gold had fallen out of favor. The S&P and the Dow were roaring. Bitcoin was roaring. And here you have the Bundesbank making a big deal about getting their gold back. That same year, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, many of these Eastern European banks did the exact same thing. Right after the Bundesbank did, they said to not only the New York Federal Reserve, but the Bank of England, give us back our gold, please. Now, really, for many, many years, really, you could go back to the end of World War II, the gold was either, most of the gold was held in the New York Federal Reserve because of safety, Western jurisdiction, Western rule of law, and the safety that it presented. But more recently, it was held at these two locations in England to give direct access to trading at the LBMA and also to the COMEX in New York. So it would be held by the Bank of England, it would be held by the New York Federal Reserve safely, and then they could trade it quickly, seamlessly on the two major hubs for price setting and liquidity. And they said, give us back our gold. Now, this was supremely interesting because no one was buying gold. In fact, the central banks had been net sellers of gold. In 2018, the following year, those same banks that requested all their gold bought more gold as a group together than they did in the previous 60 years combined. Now I start getting really interested. I'm talking in seminars about this. I'm speaking at it at conferences. In 2019, those same banks doubled the amount they bought the previous year. 100% increase. And now things are really getting crazy. And then out of nowhere, maybe it's just coincidence or not, the Bank of International Settlements, the most well-informed bank on the planet, the most powerful bank on the planet, the central bank, and this is the key to so much of what is happening now, reclassified gold is the world's only other tier one reserve asset. Since the end of World War II, there's been basically one tier one reserve by central bank standards, US dollars / US treasuries. And all of a sudden, the BIS reclassifies gold from tier 3, where only 50% is calculated on your balance sheet, to tier 1, the only other tier 1. So all of these central banks, I believe, were told by the BIS in 2017, start bringing your gold home, start buying it. Things are going to happen with gold. And we have seen over the last 4 or 5 years, 5 years now, those central banks buying more every single year, to the point where what is driving the price of gold, or has driven the price of gold really since 2019 or 2018, has been massive central bank buying. That's where everything starts. Now, you go back my entire career, I've been doing this for 35 years, I can think of maybe 1 year, maybe 2, where there was any form of net imports of gold to the United States. The United States is traditionally a net exporter of gold. They did import some, I think, in 2011 and some in 2020 when everyone thought the world was coming to an end. Not a lot. But since November, since Trump won the election, the United States has become a massive importer of gold. I'm talking more gold has been imported since January of this year than has been since World War II, when everyone sent us their gold. So wow. This is a big deal. Gold is the only other tier 1 reserve asset, and it is being massively accumulated by the traders who are the most well-funded and more importantly, the most well-informed. not only massively accumulated, but repatriated from the traditional hubs of liquidity. We don't want to leave it with you. We know that that's where we get liquidity, but we'd rather have it at home. Thank you very much. So we fast forward to where we are right now. We're a net importer of gold, the only other tier one asset in the world. We hear members of the Bundesbank in Germany saying, gold should be revalued. On every central bank balance sheet across the Western world, gold is still valued at the old Bretton Woods price of $35 an ounce. In the United States, it's $42.22, and I'll explain that in a minute. But you have members of the Bundesbank saying we need to revalue gold to offset the liabilities in our balance sheet. Even just marking it to market will provide a tremendous amount of liquidity into our coffers that will allow us to normalize our balance sheet. You have the head of the Dutch National Bank who's been screaming this for a while. You have Senator Cynthia Loomis from Wyoming who is talking about here in the United States, gold should be revalued in the gold revaluation account. You can't make it up, in order to provide enough liquidity to take some of it to buy Bitcoin for the strategic Bitcoin account. So you have all of these players talking about revaluing gold. You have Judy Shelton, and a lot of people think she'll take over for Powell this time. I think there's a very good chance she will. But she said to me, listen, the whole premise of her book is that who the hell wants to buy U.S. treasuries that have been weaponized and are being inflated, have default risk, have inflation risk, have all sorts of risk, where net, since 2014, there has been no new central bank buying of U.S. treasuries predominantly. Now, there have been central banks that bought treasuries, but there's been more net selling than more net buying. And so net, it's central banks have been net sellers of our treasuries. And why would you want to own treasuries in a country that is nearly $200 trillion in debt? Yeah, 36 on the balance sheet, but Medicare and Medicaid and Social Security, government military pensions exceed 175 trillion. We're nearly 200 trillion in debt. And a trillion is a long time ago, or a lot. And if we talk about it in terms of seconds, 31,688 years ago is a trillion seconds. So you're talking numbers that are so big people can't comprehend. We're 200 trillion in debt, yet we've offshored all of our manufacturing. We don't produce anything any longer other than really financial services. So it's a situation where we're so far down the rabbit hole. Why would anyone want to give us their goods, like the Saudis, as an example? Why would they want to pull oil out of the ground with energy and effort, only to sell it to us for dollars that we can create out of thin air and then recycle? Part of the petrodollar deal was to recycle the excess into U.S. treasuries, while the Federal Reserve can print money to buy treasuries. Well, that doesn't seem very moral. If you can do it just like that, why would they give us their oil for dollars that we can create out of nowhere, and then treasuries, which we can buy with money we created from nowhere? Well, really, they don't. And much of the BRICS nations, much of the countries in Asia and in the Middle East are saying, there are better alternatives. So instead, if gold is now the only other tier one reserve asset, well, what we have been seeing is countries shedding treasuries and buying gold, the only other tier one. For 25 years, since 2000, gold has doubled the performance of the 10-year treasury. No counterparty risk. It can't be sanctioned, can't be confiscated like we did with the Russian assets. 5 billion of them. In essence, we defaulted on Russia. And who are we? We're a country, and again, I'm proud to be an American. I'm a patriot, right? But we invaded Iraq 21 years ago, and we're still there today. We went there under the guise of weapons of mass destruction. Sorry, we didn't find them. We destroyed your country, toppled your regime, but we're sorry. And we're sanctioning 14 of your banks for having the audacity to trade with Iran to buy liquid natural gas. We know you're boiling to death in the summer and you need to cool your homes, but you can't trade with them, so we're going to sanction your banks. And by the way, the $90 million or $90 billion that you made in oil revenue in 2023, well, we're going to hang on to it here at the Federal Reserve because you're not allowed to direct your own natural resource revenue. They asked us at the end of 23 into 24, can we have $1 billion, please? And we said, no, we'll give it to you next year. So what we are seeing is Iraq, as an example, kicking Western coalition forces out. They've gotten rid of all dollars in all of their banks. There are no green dollars anymore. The world is tired of this. They're tired of being bullied. They're tired of the hegemony. They're tired of all of this stuff. So they're uniting under a common thread. So put all of this together. The BRICS nations are the ones that have been buying all the gold, producing all of the gold. The European countries in the East, the Eastern European countries, understand what's happening. They want all their gold back. They're buying gold. You have members of various central banks and senators here in the United States calling to revalue gold held in the revaluation account. You have Judy Shelton telling me Trump will issue gold-backed treasuries on July 4th, 2026. We've become a net importer of the only other tier one reserve asset on the planet. Yeah. You put all this together, you start to see something is taking shape. And when we talk about the tariffs, I mean, it's nonsense. There's something called Triffin's dilemma. And the White House knows this. They've written about this. They've written about this, talking about the issues recently of being the world reserve currency. Triffin's dilemma is an economic theory that basically says if you are the reserve currency, you will always run trade deficits because the world needs more dollars than you could ever sell stuff in order to create you could never export enough to give the dollars to the rest of the world. You have to create more dollars and export dollars. In essence, what it's saying, there are more dollars needed than we could ever come up with just through commerce. And so you will always run a trade deficit. They understand this. If you are the world reserve currency, you will run trade deficits, period. So these tariffs are not tariffs. They're sanctions masquerading as tariffs. So we put it all together. What is happening with gold? I truly do believe that gold is being reintroduced into the monetary system. It is going to either back treasuries or maybe it even backs M1, which is about $2.5 trillion. M1 is the currency in circulation. When you go back to 33 and before, when the U.S. backed gold or currency was backed by gold, it was just M1. M2 is about 92% credit, 8% treasury notes. That credit would be like what you see when you log onto your bank account. That's a promise to pay treasury notes. But until you do it, it's just credit. And so that is on M2. M1, if we were to divide the amount of gold supposedly held by the Federal Reserve for on behalf of the U.S. Treasury, you divide that number, the 8,300 metric tons, into you divide that into the money supply of M1, you get about $9,050 an ounce. Could it go that high? Maybe, maybe not. But what I'm simply saying is this, is that gold is not reacting to an event. No one in this country, in terms of the retail investor, has any clue about what's going on with gold. Right. What is happening with gold is that the most sophisticated money in the world realizes that we are moving towards a shift, towards sound money again, towards something that is immutable, something that cannot be confiscated, cannot be sanctioned,